Fed hits pause again. But the economy just flinched. They just held rates steady again. No hike, no cut, just a lot of staring at data and pretending it's under control. Meanwhile, the economy shrank. Hiring came in hotter than expected, and tariffs are creeping back in like they did in 2019, only this time they're wearing brass knuckles. If you're sick of Wall Street bootlicking and media panic that sounds like a Xanax ad, subscribe. I'm trying to hit 1,000, you can get me one closer. The Fed kept rates exactly where they've been, 4.25 to 4.5%. That's the third time in a row they've hit pause, which in Fed speak means we have no idea what's happening, so we're just gonna ride it out longer. Jerome Powell came out with his usual monotone, basically saying they don't feel the need to rush anything, which is interesting considering the state of the economy last quarter. Inflation's still squatting above 2% like it owns the place, and with new tariffs kicking in, prices aren't exactly trending down yet. At the same time, the economy shrank 0.3% last quarter. That's not a full-blown recession, but it's the Fed's version of a warning light. And yet somehow, we added 177,000 jobs in April. So it's one of those weird moments where everything looks fine until it doesn't. Like your car right before the check engine light ruins your week. Jerome Powell said they're taking a wait-and-see approach. Translation, they're watching the same mess we are but getting paid more to squint at spreadsheets. He's not ruling out a rate cut later this year, but he's also not promising anything. Basically, the Fed is driving with one foot on the gas, one on the brake, and both eyes on the rearview mirror. They're hoping inflation behaves, the job market holds, and the economy doesn't faceplant again. Not a plan, just vibes. Wall Street heard no rate hike and did a little victory dance. The S&P 500 crept up 0.4%. The Dow rose 0.7%. Even the Nasdaq joined the party with a polite 0.3%. Meanwhile, bond yields dipped. The 10-year Treasury dropped to 4.27%. Basically investors saying, yeah, we're not sold on this soft landing either. Everyone's acting like the Fed just stuck the landing. Reality check, they haven't even jumped yet. If you're carrying debt, don't expect a break anytime soon. Credit card interest is still hanging out in the double digits like an unwanted house guest. Mortgages aren't getting cheaper either. And if you're hoping for a car loan that doesn't feel like a punishment, buckle up. For investors, this is your signal to stop coasting. Volatility's not going away. Diversifying isn't just a buzzword, it's your seatbelt. Smart money is hedging. Dumb money is watching TikToks about meme stocks. The Fed's playing it cool, but underneath the surface, the economy's twitching. Trump didn't just suggest a rate cut, he called the Fed out. Said it was time to stop dragging their feet and do what's right for the economy. He wants to stimulate growth, ease pressure on borrowers, and give American manufacturers some breathing room in this tariff war. A rate cut could have lit a fire under the markets. It also would have made it easier for regular folks to catch a break on credit and housing. But they didn't bite. The Fed? They're acting like they don't want to look like they're taking orders from a Republican, especially that Republican. So instead of action, we get caution and a bunch of data-dependent delay tactics. They're hoping the job market keeps bailing them out while inflation politely fades into the background. Spoiler, it won't. This is where the real investors separate from the spectators. If you're just now paying attention, you're already late, but not too late to make a move. And if you want honest takes without the Wall Street perfume, hit subscribe. When this channel hits 1,000, I'll finally be able to afford a second opinion that isn't sponsored by BlackRock.